Okay, Oystein, welcome back. It's a Christmas show again. Thank you so much for
Flexmas show.
Flexmas show. Thank you for keeping the tradition alive again. 2024 soon in the books. How does it feel? It's been a hectic year, as always.
Yeah, it has. I believe it's 1.5 years since I was last when we were then in Avance Gas. We were trading very well into 23, which was supposed to be a terrible year for VLGC market, which turned out to be a fantastic year. So yeah, I think we made trading profit that year, just pure freight trading profit of 164 million. We paid out 165, and then we've been selling off the ships this year. We started the year with 20 ships, 16 VLGCs, 4 MGCs, and we just announced we have sold all of them. So we've gone from, hopefully by year end, we have 0 ships, and we started the year with 20 ships. So yeah, quite eventful.
Yeah, exactly. So basically, the big deal in the summer, you have talked about the story before, but for new listeners, how would you recap? You were planning to going on a summer vacation, and then suddenly you are negotiating a huge deal.
Yeah, I think we have to go a bit more back, because so in 2022 we started selling off older ships. So we sold 3 ships then. Altogether, I think we booked 20 million or so in profit on those 3 older ships, 2008-9 built. And this was kind of a process of selling off the older ships and renewing with new dual fuel ships, which we have taken delivery of in 22, 23, and then we had 2 scheduled for this year. So that was a natural evolution of the company. Early this year, we sold the last 2 old ships, Iris and Venus Glory, booked fantastic profits on those ships. And we also got an offer to sell our new buildings, and you don't like to sell your newest ships. However, the price was at such a level that we just felt it. You couldn't say no to it. So 120 million each ship, contracted for 78 million, upgraded by 2 million for the ammonia spec to 80. So you really do a huge profit selling the ships at delivery. And then once you're selling those ships, we were left with 12 VLGCs. We basically, I would say, more than 80% of our cargoes are US. US is about 50% of the market, but they are longer voyages. So kind of, if you look at ton mileage for us, it's at least 80% US. And then you are very dependent on the Panama Canal. Last year, the reason market was so good, especially end of the year, was the Panama was congested, and daily transit was taken down by about 50%, and which resulted in all the ships having to ballast via Cape of Good Hope, and also doing that on laden legs. This year, of course, Panama has eventually returned to normal operation by summer. But still, so we have like a handicap. 12 ships is not a huge fleet. We are competing with BW, Dorian, those are our closest peers, maybe as well Petrodec. They have much better ranking. So we are trading with a handicap. So it was better for us, we felt, to sell those ships to somebody who can benefit more from those ships who have better Panama ranking. And I've been talking to BW for some times, even with Vonheim, who was CEO until I believe September last year. And then when Christian took over, and of course I knew him well because he's been the CEO of Avance Gas in the past when I was on the board. So we kind of been talking about this deal and trying to find a deal that fits. We saw, some of these kind of corporate deals, often a bit challenging to get done. It's a lot of corporate law and more stuff to argue about. So what we did was just make a very simple structure. So basically the deal was take a spreadsheet, you put in 12 ships, put in the value, then we agree on the value of the ships. That was, I think, the easiest part, where we were less apart because you have broker values. Then the part about the settlement, I think we also agreed quite early that Hemen, who is the biggest shareholder in Avance, they should have 9.9. And then so we kind of, that's a limitation on the numbers of shares you can issue. So that factor is done. And then the third element being, at what price should those shares being issued? So BW share, I believe, was like up at maybe $22 this summer. Like most shipping stocks, it's come down quite a lot. So we had to also agree what is the NAV or the fair price of the BW share. where also we managed to find common ground and put that at $17.25 per share. So then we had the price of the ships, the ownership stake post-transaction, and the issuance price of the BW shares. And then we agreed to make 12 separate deals. Kind of every ship is a deal, and it's done on a MOA, Memorandum of Agreement, which is a standard Norwegian sales forms for a ship. So it's a really simple and quick way of doing it. I was talking to Christian briefly about this end of June. Talked about whether to reboot the discussion. And then just when I was going on the summer vacation, he called me and he started giving me an offer. We were negotiating over the summer for 2 weeks, and actually we agreed on pricing after only 2 weeks. And then we spent 2 weeks kind of doing the documentation, which is the heads of agreement and how it's going to be regulated. And deal was basically done in 4 weeks. It's a 1 billion and 50 million deal done in 4 weeks. That's not common.
No. And with limited amount of lawing fees as well.
Fees. Because we're using standard forms.
Yeah.
So it's really, you have a standard form and you put in the parameters.
Yes. But now, so you went out and said, okay, we're closing down the company. And I remember from previous conversation that psychologically, it's not the easiest thing to close down a company, because there's always, you can be opportunistic, it's fun buying new ships, maybe there's a new play on ammonia and stuff like that. But if you take us behind the scenes discussing this, was this like 99% secure that we're going to close down the company? Or was it any discussion, any ideas put forward? Should we do something else or?
No, of course we had 4 MGC new buildings left, so I think BW, they were interested in those, but we had these parameters to walk around, and it was hard to put those in because there was a certain number of shares to be issued, and of course I understand them in this cycle, they don't want to lever up too much. So we had to find a new buyer for those ships. The kind of the natural fit was Exmar, which has a big fleet on water and an even bigger order book. They have done this for a long time, so we had a discussion ongoing with them, and where we also found common ground. It was basically being agreed about one thing, it's the price. So once we get agreed on the price, it's really just a novation of those shipbuilding contracts from us to them. That also was done very quickly. And once that's done, you sold off all your assets. And then the natural thing to do is to close down, because it costs money to run a shipping company. You have employees, you have listing fees, you have audit fees, so we want to minimize that cost and maximize the amount we could pay out to our shareholders. And to be frank, this should happen more often in shipping. It's a cyclical industry. You get in, you sell off your assets. That's not the time to invest. That's the time to return the money. And then later on, if you have good ideas, I think people will remember the fact that you were disciplined enough to pay back all the money to them. And maybe that will allow you to raise money at a later stage. And I think in the JF system, of course, we have had very good track record of, if we have projects, we can find money for it, because we have a good track record of being good stewards of shareholders' money.
Yeah, very good summary. So just a last question on Avance then. You are, known to be very shareholder friendly. Is there anything left to be done because you need to close down the company, pay all the money back? Is everything very straightforward and not to maximize that, or are there, things to?
No, of course, there's probably people who would like to make it very difficult and they could hold on to the money for longer. But we went ex-dividend today, $268 million for the third quarter. We also paid $268 million of dividend for Q1 and Q2. We have reported here in November, so we said how much we expect to have after we pay that dividend. It's a similar amount of cash. And then we have the BW shares, which we have told people that we intend to spin off as dividend once the lockup elapses. So there is a 40 days lockup on those shares because of New York Stock Exchange rules. So basically, once we get into February, we can start just returning the rest of money. But there is a milestone payment from Exmar, which is scheduled to be due in April. So that's the residual amount. And once that is done, we just close down. And
How would you rate the job of Avance, your journey?
It's been spectacular. I took over in middle of March 22. Of course, everybody was depressed about outlook for 23 because there was scheduled 46 ships, which is a huge number. Fleet today is around 400 ships. So what we thought was a good idea, because if you are trading spot, there's a lot of volatility. So what we did was to refinance the company, really boost the cash balance. Because what you don't want to be doing is to trade in an environment where you're always looking at your cash burn and how long it will take before you are out of money, because that do something with your psyche in terms of having the balls to kind of stay in the market. So we kind of leveled up the company to be in a position where we could trade. And then, of course, we were lucky in the sense that we had the Panama drought. We also had, I think this maybe was not that surprising for us, but we had much higher volume growth out of US than most people expected. And we even had like a Mythbuster special on this, I believe in November 2022, because with the title 5 Things to Worry About in the VLGC Market. And then we had the most common themes which people were worried about, and we tried to address those issues and tell them why we were not that worried. And of course, eventually it turned out that we were right, but of course we were also a bit luckier with the weather. But that year turned out very well. A good market, people are making money, shipbuilding prices are going up. It's a very good time where you can then divest the fleet at a good level.
Yeah.
And basically then altogether we sold 23 ships, slightly more than $1.8 billion, and profit from those sales is close to $500 million. And then you have the trading profit on top of it. And actually, as we are looking at Q3 now, we're actually $10 million ahead of last year in terms of trading profits. So we made also 112 million on trading profits for the first 3 quarters. So we also been making some money on that on the side.
Yeah, no, it's been an exceptional journey for sure. So let's switch gear over to Flex LNG. I believe you now have been in the company for over 7 years. I think you gave your 29th quarter presentation recently.
Yeah.
Are we as motivated and giving 30 more?
Yeah, but you know, Flex is like a baby, you know. It's I remember when we started it, and you know, we had our first ship scheduled for delivery January 2018. So, you know, like busy setting up bank accounts and getting KYC through and having to get financing actually in place to get. We got the financing in place between Christmas and New Year 2017, and delivery of first ship was 9th January, and then the second 11th January. So it was a busy time, and then building up the organization, and then of course having that tough ride through COVID, and then when suddenly market came back in 21, 22, we fixed a lot of term deals, especially in 2022. You know, when Russia invaded Ukraine, gas prices went sky high. I believe that year we did around 38 years of backlog, additional backlog. And then 23 was a bit slow, but now in November we done 3 big deals where we have Courageous and Resolute being fixed from 29 to 32, but possibly up to 39. And then lately now Constellation fixed from 26 to 41. So it really means we have a big backlog, 63 years, with option up to 98 years of backlog. So it's really kind of, I think Pareto had a very good title on the research note, The Good House in the Bad Neighborhood. So I'm still motivated. It's a fantastic, interesting segment.
Yeah. Yeah, that's interesting. But like you said, so you started with, you know, since you view it as sort of like in analogy terms like a baby, it means that you have the same motivation to keep building it. And it's not, it's still a hectic job. So it's not like,
Yeah, of course. Last 2.5 years, I've probably been spending 50% of my time on Flex and 50% on Avance. So, or maybe it's 2 times 100% is probably more accurate.
Yeah, probably. So you had a very interesting quote. I think it says a lot about you as a CEO, but also says something about the industry. So you said that you don't really believe in having fixed strategies. I think you referenced working with some Japanese people. I don't but other can also enjoy a fixed strategy. But tell me why that has been important, and also maybe it dives really well into the flex journey as well, being super adaptive and flexible.
Yeah, shipping is super cyclical. Yeah. If you have a fixed strategy, it's kind of doesn't match with the underlying business. Of course, you can have a vision that, you know, we want to be a leading LNG shipping operator, or whatever.
Yeah.
But, you know, shipping is more about tactics than strategy. And, you know, I saw this interview with Jack Wells a long time ago, and he says that, you know, strategy is overrated. Find a lot of smart people and execute like hell. Tactics is what matter. And I think that's the same with shipping. You know, you have to be adaptable, change your strategy, think about, you know, opportunity. You have to be willing to sell, you know, probably also your best assets, because it's a bit different in LNG. It's not really a very liquid market. So tankers, bulkers, and lately VLGC has been a fairly liquid second-hand market, so you can monetize. In LNG, it's more by the monetization strategy has been to, when the market is good, you try to fix 7 years, 10 years, and now even 15 years of contracts, so you can lock in that cash flow. And that's the way you lock in the cash flow rather than selling the ships, because it's not that market really where you sell and buy ships all the time.
Yeah, that's a very fair point. So given the last presentation, you talked about, you know, the LNG story, and I think if I understood you correctly, you don't see like a big next wave until 27, 28. Can you explain the reasoning behind it?
Now we have a period now with muted volume growth, and actually it's the, you know, we have had muted volume growth in 22. 22, this was masked by cargo prices going to the moon. At one time we had cargo prices at $100 per million BTU. I believe this was August 26, 2022. That equivalent to $600 per barrel of oil. So then when you have this kind of cargo economics, you just make a killing on the cargo. You can make huge profits. So if you're paying 100,000 or 150,000, even 200,000, doesn't really matter. It doesn't eat into your margin. And also you have to realize that you had a lot of disruptions. You had Europe rapidly trying to build up regasification capacity to be able to import all this LNG, which is creating congestion. So then you have more inefficiencies, and shipping thrive on inefficiencies. So at that time, you know, even though volume growth was low, rates were high because of these kind of externalities in the market. In 23, market started to more normalize, still very muted volume growth. More fleet growth and the market starting to rebalance, but still elevated cargo prices, keeping cargo economics pretty high. And then this year we have seen just way too many ships. So in our presentation, I believe we said it's going to be around 68 ships delivered this year. So you have fleet growth of, you know, 10%, volume growth 1%. So we have 1% volume growth, 10% fleet growth, and there's no arbitrage. So actually European prices are at level at Asia, which means that shifting the cargo from US to Asia compared to Europe isn't really very super profitable. That also kills off that, and that's why we've seen a very odd market. We had one ship coming open March 22. We took her to dry dock, had her available middle of April. We took her in the spot market for one single voyage, and then we were able to lock in that ship for our 10-month charter, and we just, let's do it, because we didn't want to have spot exposure this year, to be honest. And then for some time there, it actually looked like the wrong decision, because summer market was pretty good, but much better than we expected. But then rates peaked middle of August at, let's call it $85,000 per day. This is August 15 is usually when rates goes this way, and instead rates gone this way, down to now, let's call it $30,000, maybe around that level. So that's the most peculiar winter market we have seen. So then, of course, we're very happy doing that 10 months charter. And then, of course, this year, 68 ships for delivery. Next year, it's going to be, let's call it around 85. 26, also around 85 ships. So you have a massive growth of ships coming now. Volume growth will pick up next year. So we are seeing some more volumes coming to the market end of this year into 2026. But those are coming slower. So we don't really see the market balancing before 27-ish.
And you can't really time in all the scrapping because it depends on the market and other dynamics, so it's hard to...
Of course, there should have been scrapping in 22, 23.
Yeah.
You have steamships coming off charters, but when the market is to the moon, nobody's scrapping ships.
No.
So this is what you really need to get the scrapping cycle. And we've seen that now recently. There's a lot of steam tonnage coming to the market for demolition.
Yeah. No, it's going to be exciting times ahead. So in the presentation, you talked a bit about, of course, the clients you have been able to get. And I think, one point is, of course, having very modern ships helps. But as you also pointed out, that's not the only factor to get the big clients. Can you explain a bit how Flex LNG position towards clients and are able to land very good clients? The work that goes beyond the seas.
Yeah, it's a huge team effort.
Yeah, exactly.
Because it goes everything from the crew on board, the captain's interaction with the client. It's about the operator dealing with the client. It's about that kind of the technical department, because you have to remember these are ships running 24/7 all day long. Your car is in your garage. Do you have a car? No. No, I thought so. Anyway, but okay, my car is in a garage. So utilization of a car. Let's assume normal driving length in Norway is 12,000 kilometers, and just let's assume average speed is 60 kilometers. Maybe not 60 kilometers here in Oslo, but in general. So that means your car is being utilized 2% of the year. 98% is not being utilized. You take your car to service every second year, and still it breaks down. These ships are trading boom all the time. They go to service every fifth year. So, there are, problems popping up all the time. We have had hardly any off-hire, technical off-hire in Flex since we started. Ships now are on average 5 years. But that means sometimes things happen. And then you need to have a good interaction with the charter. And then you have to have a adaptable technical team who can problem solve things. And of course, communication is important. You can easily tell what is the problem. This is the plan for correcting it. Can you approve the plan? Doing actually the execution of that plan and delivering the ship back once something has been repaired, for example. So the technical, and that's crucial because this is our mission critical logistical value chain.
Yeah.
And then, of course, you have the chartering side, where Marius and I, we meet our clients all the time. We try to travel a lot, be in front of them, ask them what are the requirements, what would they see of improvement. And of course, on our overlay on all of this is safety.
Yeah.
So it's really the full package.
Yeah.
And we try to be nimble, we try to be flexible. I think one advantage we have had is that we started off trading all the ship spot. Trading the ship spot is super demanding because you have to be agile all the time. You have to be 24/7 online. A charter might change the destination of the cargo, have to be able to reach you. Yeah. And then basically the ones who have been fixing on with us on spot, they have been happy with that service level. And of course they've been happy with the ships because we have the right ships. And then they've said, okay, let's move this from a spot business to long-term charters with you. And we haven't really done a lot of tender activities. We rather talk to clients directly and try to find solutions and where we can tailor make the period and time charter to what they need. So I think it's really about this, being customer engaged.
Yeah, very good answer. So one question regarding, finance and balance sheet, because I was doing a quick search and I found this investor page said that, okay, they didn't really like the Flex LNG debt and on the balance sheet. But then you have said on quarter calls that we could run this company without any cash because of the payment structure. So can you take us a bit inside the company? why do you need, hedging a large amount of debt? Because for some investors, they feel like that is something to follow. But I know you have full control. So what is like the principle when setting up the finance structure?
Yeah, generally you have to keep in mind LNG shipping business is super capital intensive. Right now, sticker price for a ship is 250 million, and you maybe even 255, 60. You get that ship in 2028, and you have cost of capital of waiting for that time. You have supervision, so it's very cost efficient. So if you're going to do this entirely with equity, it's going to be challenging in terms of the return. So let's just assume unlevered returns on assets are 9%. Okay, 9% equity return. I think most investors would think that would be not that attractive, to be honest. So how can you make it more attractive? It's the magic of debt. Of course, it's much easier to do this magic of debt when interest rate is zero.
Yeah.
And then, at one time we fixed one ship when I say fixed, we fixed the financing on one ship during COVID. And the banks were, this is hard, the banking market is not very good. We have to ask you to pay a higher margin. And at that time we paid the margin, at that time was the highest we, done, LIBOR plus 285. But at that time you could fix 5-year rates at 0.45. So we fixed everything. So you get a 5-year loan at 3.3%. So let's just assume your asset return is 9%, and let's just assume your financing is 50%. So then you have 50% of the financing at 3.3%. That magnifies the return on your equity. Yes, of course, it increases the risk a bit because there is a waterfall of priority here that the banks and the interest and all that comes before equity, which is a residual holder. But still, we think that's better. Today, it's the magic of debt is harder. General interest rate, if you look at long-term interest rate, Fed is expected to cut to 4%, and then the curve is flat. Since we are now a much better credit risk because of this backlog, let's assume we are paying a margin of 1.7%. So that 4%, and you add 1.7%, still it's less than 6% cost of debt. And actually in our last presentation, we put up our funding, I call it the funding onion, where we kind of take the average cost of our debt. This is based on floating rate. I believe we put that at 4.7 or something. But if you put on that, you have average cost of debt around 6%. So then if your assets is returning 9%, you have 6% on 50% of your capital, you magnify your return on the equity to a double digit. So that's why we do have the debt, because we feel we can source capital cheaper without making the equity too much risky.
Yeah.
So it's really about finding the best cost of capital. And of course, private equity companies have been doing this for a very long time. It's not really big hidden secrets. Other benefit of having the debt is that you can do certain deals with the banks, where part of the loan package is that you can enter into what we call the interest rate swaps, where you can hedge your interest rates.
Which you do.
Which we do, and which we have done quite successful. I believe in our Q3 numbers, we said accumulated profit on our interest rate swapping from 2021 to end of Q3 2024 was somewhere around $118 million. And that was after, I think we took a mark-to-market hit of around 10 million in Q3 because interest rate was sliding then. During that period, we doubled down. We doubled the duration of our hedging. And as we said in the call, we made more than 10 million just in October. So, which kind of brings that number to 130 million or something in profit. So we kind of try to hedge because it's also locking in the cash flow. So once you're hedging interest rates, when Russia invaded Ukraine, 10-year interest rate in the US went from 2.3% to 1.7% within a week. you could hedge 10-year interest rate risk in the US for 1.7%. Imagine, you know. Then you and then if you add a margin on top of that, you can hedge 10-year debt at 3.5%. So why didn't we do it more? It's of course you don't have unlimited lines. We did 200 million during that 1 week. When Silicon Valley Bank went over in March 23, 1 and 2 year interest rates in the US went from like 5.2 to less than 4% within a week. And then we did a lot of that as well.
Yeah.
So it gives us ability to hedge during financial distress in the market.
Yeah. No, very great summary. So talking about finance then, how do you see the picture going forward?
Ship financing or?
No, interest rates.
Interest rate? Oh, yeah, I think it's never been this hard. I think maybe I said something similar last time when I was 1.5 years. It's really hard now because you have these different elements where inflation is high, it's come down, but there is no financial discipline anymore. So kind of the old kind of regime where there was a certain level of prudence in terms of fiscal policies, it's really gone.
Yeah.
Which means US could end up as Japan or they could end up as something worse. So it's really harder to predict interest rate market these days. What we rather think is being a bit more tactical. So when interest rate fell really a lot during September when Fed cut 50 basis points, you had these huge movements in 5-year rates. Then you look at the implied curve, okay, let's do a lot of swaps. And so rather acting more tactical on events. I think in general, market is now 4%. It's a pretty good bet. So in long term, it's flatlined at 4%. If you listen to Fed, they think it should be 3%.
Yeah.
They are kind of, you should have 2% inflation and 1% R star or the real economic growth. And then the question is, what is R star? Should it now be 0%, which was for quite a lot of time after the financial crisis? Should it be 2%? Or somewhere in the middle? Is AI today gonna deliver the productivity boost we saw from IT in the 90s when productivity growth went up 2% and above? Then you could easily have this 4% interest rate in the US.
Yeah, that's a very good question. So it's a Christmas show, so you have to do some shipping stories.
Yeah.
So first topic I picked, it's a very topic that has been covered a lot. So the dark fleet, ships are getting abandoned. How would you summarize everything what's going on now? Of course, we've seen it in the tankers. You said there's stuff going on in LNG as well. The dark fleet in general, how big of a concern is it?
It's a huge concern. It's just been growing and growing and growing. So first it was like Venezuela and then Iran and then Russia. One thing is of course where is the money going and what is it funding? That's one issue. And then it's the kind of the maritime risk in terms of there has been already catastrophes and there's going to be more. You might have huge tankers breaking, giving very big oil spills. A lot of these ship-to-ships are being done outside of Malaysia. We recently had this oil spill hitting the beach of Singapore, but that's small spills. Imagine if you have one Suezmax tanker, 1 million barrels breaking. These ships, a lot of them, they don't have any insurance. Ships are being abandoned and crew, they don't want to leave the ship because they're not getting paid. So it is really very limited enforcement there. Of course, US has been slack on enforcement because they don't want to have higher oil price. So that will be I think that will be a bit interesting now. Donald Trump, he has promised maximum pressure 2.0. Whether there will be made a deal to crack down on Iranian exports with kind of a tacit agreement with Saudi, maybe the Emirates pushing more barrels to the market so that oil price doesn't go up. I think everybody been surprised about how many barrels the Russians been able to put on ships. When you look at back in 98 when you had the Russia economic crisis, you saw oil production plummeting. You don't see this now. They've been able to keep production. They've been able to keep them exported. I didn't think that Iranian would be able to push out now. It's more than 1.5 million barrels. Russians are keep pulling out cargoes. Whether Trump will find a solution on Ukraine, then the Russian barrels might be suddenly out of the kind of the dark fleet. Whether the ships will still be in the dark fleet, that's another question. Of course, anyways, a lot of these ships are so old, so they're going to leave anyway. So I think in general it's a huge catalyst for some of these segments, especially kind of the product tankers, the oil tankers, and the VLGC. The VLGCs is a huge part of the fleet who is sanctioned. For some, that effect of removing these ships will to some extent be kind of alleviated by the fact that there will be less disruptions and it will become a more efficient trade. So then the question is scrapping be more than the ton mileage effect? So these are things that we will certainly know more about in 2025.
But being sort of the world police, it's hard enough on land. And then you take it out on the oceans. And I remember watching this fascinating documentary. It was called Lawless Ocean. And there was there was a homicide and they tried to investigate it between different ports, different nations. Completely impossible to get this case closed. And then I'm thinking, what's the solution to fix this? Because local authorities, government, I don't see them having the resources. And then it's is it going to the White House and pushing US to take the role? Because I don't see that happen either.
No,
so it's there's no solution in
no,
solving.
The solution has so far been US putting on sanctions and getting EU to join the sanction, maybe Japan. And that's making it more difficult, but they find ways around it. But in general, I think most countries have in their interest that you don't have ships going down with a lot of oil or petroleum products, which is going to be an environmental catastrophe. So, but of course, these guys are using the loopholes. They're going into international water where it's hard to enforce it. So, it's a good book on that, The Dark Waters. Have you read that?
No, I haven't.
It's a good book about the lawlessness of some of these cases. Yes.
Yeah, very interesting. So you mentioned EU, and that's the perfect segue to the next story. Recently, there was an interview from the Qatar Energy CEO talking about EU didn't envision himself selling LNG to Europe, given the new ESG rules. How would you break down that story? Is that just a warning and it doesn't going to happen, or is there something big at play here with the regulations?
I don't think it's going to happen. I understand his frustration, but the Qataris generally, the carbon emissions on those cargoes are measured quite favorable. So, but I generally share his frustration with EU becoming this monster of regulation. It seems like in the past we had this rule, they could collect taxes 1% of GDP, and then once COVID happened, they managed to find a lot of loopholes. So we're going to have a COVID relief package, and we're going to have bonds issued on this, where you are kind of joint and several liability on the membership states, so we can fund COVID relief package. Now they want to have a new package on military spending, so because in order to get this 2% or maybe higher. But so okay, you have your budget and you can't afford to pay 2% of your budget to defense, so you need to have packages. So EU is always increasing the scope of what they want to do. And then one way of also increasing the scope and of what they can do is regulation. So that's basically taxation by regulation, which is what they're doing now. And it's become a nightmare doing business in Europe in general because of all these rules. There should be put certain limitations on this rulemaking, which is driving up business costs a lot. Where you can write new laws, but you have to delete at least one law for every law you pass, because this is becoming terrible in terms of business, and it really creates bigger barriers to create businesses because compliance cost is so high. Regulation is great for big businesses because they can cope with it and they can afford it, but it's very hard for small businesses.
Yeah, definitely. What is the most overlooked shipping story that you believe doesn't get enough coverage or attention?
I would like to say Flex LNG, but no,
You talked about methane leakage, that ambitions are way too low.
I said that. I think that still applies, but if you have the methane pledge, you want to reduce it by 30%, but basically what the politicians is saying is that all the cuts is going to be in the oil and gas industry. And every time we propose to do anything on the agriculture sector, which is the big emitter, the farmers, they get crazy and they protest, and those kind of regulation is removed very quickly. So methane is the quickest way of reducing global warming, is to reduce methane emissions. Not only methane emissions, actually, you also have the kind of the nitrous oxide emissions. That's even quicker, but it's less of a concern. Shipping, I think the biggest overlooked story with shipping today is that shipping stocks in general are very cheap. Of course, we do understand that if you look at price NAV, typically new building prices or second-hand prices are lagging, but even if you are discounting pretty steep fall in asset prices, I think most shipping stocks now screen quite cheap.
Yeah.
Which is a long time since they don't. Even you go back to May, most shipping stocks were at around NAV or plus. Today is far below.
Yeah. So turning our heads into 2025, you believe still shipping will be very attractive across several segments?
If you look at the two big segments, tankers and bulkers, still, especially if you look at the big tankers, the VLCCs, big bulkers, the Cape and Newcastle Maxes, nothing really has changed. The ships are old, fleets are aging, there's not a lot of new building orders, and of course we're still waiting for some more fiscal stimuli from China. And
but it's coming now, isn't it?
Yeah, it's coming by drip. They're drip feeding. They're not doing the big bazooka, which they should have done a long time ago. And then of course there are worries about the tariffs. Generally, I don't think tariffs going to be a big influence on the tanker market in terms of oil, or not even on iron ore and this stuff. So I think the story is intact on both the dry bulk and especially the large sizes on dry bulk and the tankers. Generally, we have a slump now. It really means that nobody's going to go on an ordering spree. So those things looks good. Chemical tankers in terms of price NAV there is very compelling. LNG, it's nice to at least have a downturn now so we can get rid of a lot of steam tonnage. VLGCs, I think we are now looking into 2 years with very limited fleet growth. Looking at 25 and 26 looks pretty promising. Then of course there's too many VLAC orders, I believe. But there's also pent-up scrapping demand there in the VLGC market. So in general, I've quite, on the LNG side, I think it's going to be a bit tough 25, 26, but still, outlook is the same.
How's your feeling for Trump economics? I saw this interview with Ken Griffin. He said, the big story here is just America is open for business again, and the second and third and fourth order consequence is just going to be very positive. Yeah. That make me think maybe is there a contrarian view here that it can backfire at some point, or is it just very positive for business and LNG and energy and everything?
Of course, it's not one-sided. It's twofold. I think it's generally good with deregulation. A lot of this is regonomics. You want to reduce waste. You want to improve productivity. You want to liberalize regulation. All of these things are good, and then of course he wants to reduce taxes. But if you look at America's economy now, it's not that regulated, especially compared to Europe. But still, it sends the right signal. It's really about supply side reform and ease of regulation, which is a good thing, and which I certainly support. Especially this LNG export moratorium, which is just pure electioneering by Biden. He want to show up his base, so eventually that became Harris' base. So those things are positive. Of course, if you're Ken Griffith, you don't really care that much about tariffs of manufactured goods, or Mexico or Canada getting tariffs. If you're doing shipping, you are more worried about tariffs, because if you look at globalization peaked 10 years ago. In terms of, if you look at this global trade, kind of peaked 10 years ago, FDIs are down a lot. So people are less pushed these days to invest cross-border, and especially China is the big example. You know, people don't really, European and US are very worried about making too much investments in China, which is kind of sad in one way, because we had like a more integration of the world economy, and now it's splitting apart.
Yeah.
So I think for shipping people, we are worried about tariffs, and what we hope is it's kind of like a negotiation tactics that, okay, he's gonna scare people shitless, like scaring Justin Trudeau to become the governor of the 51st state of America, and then trying to find a deal like he describes in his book.
That's a fair summary. So time is flying, so I have some rapid fire questions. Some questions are given by the audience as well. And one thing that pops up is a productivity question. So people are thinking or wondering, how are you able to get so much stuff done on a consistent basis?
You know, perfection is the obstacle to productivity. So you need to kind of, okay, this is what we want to do it, and push and push. And then, of course, you're not doing all this yourself. You have to kind of get people to do it. So it's kind of not overthinking and making things too complicating and having 3-hour meetings to discuss things.
Yeah.
So just GTT, get things done. That's I think is the most important thing. And then motivating people to do their best.
And how do you do that? How do you motivate them?
I don't know. I think the best way is to go with being a good example. You know, showing up, getting stuff done yourself. If you have a lazy boss, nobody's gonna put in any effort.
Yeah, that's a very good answer. So, most interesting trip you did in 2024, and some reflections from it. You've been in Japan. You've been in other places. What stands out?
No, it's a good question. I was in Japan in October. I love Japan. The food is good. The people are great. It's such a civilized country. I haven't been there for a while now because other travel engagement, and I saw that the yen is doing weak because there was so many Americans everywhere. And then going to Houston, it's like boomtown in Texas. It's really, if you go to New York and going to Houston, it's like two different countries.
Yeah.
New York, dirty, it doesn't feel that safe. It doesn't feel like it's a boomtown. Going to Houston, on the other hand, is boomtown for sure. Yeah. Even though oil price is not very high.
Yeah. That's an interesting story that they have this, and I think large corporations move to Houston now as well.
For sure. Of course, this is the problem. They're moving out of these coastal areas where there's too much regulation, too much red tape, too high taxes, and then they're moving to Florida and Houston or Texas or whatever. So that's So also keep in mind that there are these unions who are quite aggressive.
Yeah.
Where, if you run a business, you don't really want to be hijacked by these unions.
Which shipping companies or management has impressed you this year?
Yeah, your former guest, I believe. Lars Christian, he's done a fantastic job on Belships. Doing the right moves, getting good financing, not putting in much money, renewing the fleet all the time, having pretty good coverage. Having a very dividend-friendly policy, which is something I subscribe to. So I think he's done a fantastic job on Belships, which I've told him. Of course, Magnus has done a great job on Bulkers 2020 for sure. I think the guys on, it's only one guy now, on DHT, they also done well, and actually, based on what I saw today, they are the best valued tanker company in the sector. So I think they've been prudent in terms of their capital allocation strategy. So that's to mention some,
Yeah. And then we need to have a question on the merch as well, because I see, was it New York Times even writing an article about merch and the importance of it? 2025, what will be the new releases? Anything you can share?
No, I think it's going to be, but generally we don't come up with, it's like a creative process. Once we're getting close to quarterly numbers, we need to have some mercs.
Yeah.
So then we have a brainstorming but I have some ideas for February, but I'm not going to share them now.
Very good. Okay, so just the final ones. Best books, documentaries you have consumed in 2024. People who follow you on LinkedIn always see, new books, recommendations and stuff, but do you have any you want to recommend the audience to?
I just read, it's probably the most depressing book I read in years. Which, I still on the board of UMO, where Jens Ultveitmo, he's been worried about climate change now for 20 years, which, it's a right concern. And I was giving him a book here earlier this year and said, maybe it's time to worry about something else, which is the coming wave of AI, how it's an existential threat. But then I read another book just recently, which is more depressing, which is called Nuclear War, a Scenario, where she's done Annie Jacobsen, she's done a very thorough research talking to former kind of Department of Defense, former Secretary of State, a huge list of people, and where she describes kind of a scenario how a nuclear attack can escalate. And basically it's a scenario where the world starts with a nuclear attack, one attack, and within 72 hours the world is destroyed, totally destroyed. And it's kind of, it goes from hour, what happened, and the escalation, because that's the dangerous part with the nuclear war. It's the escalation effect, because, so if, for example, Russia sends a ICBM, intercontinental ballistic missile, to US, of course, the shortest route is from Siberia to the lower 48. That will take about 30 minutes. But then, it's in the booster phase, which is like 5 minutes. Then it's starting to get detected, and then it goes into orbit above space. Once it's been confirmed, there is like a 6-minute rule. So the President of America, he will have 6 minutes to decide the appropriate measure. 6 minutes to decide whether to destroy the world or maybe see if it's a false alert. But generally when it goes to that 6 minutes, it's confirmed. So 6 minutes to decide. And then it's a policy which they call use it or lose it. Because if those nuclear missiles is targeting the ICBM silos of US, they will be gone. So then you cannot retaliate unless you're using your submarine. They have 14 Ohio class submarines. So then generally you push the button because you don't want to lose it. And then it's a new retaliation. And once you're getting the submarines, you can place them much closer. Then it only takes like 15 minutes to hit targets. And, basically what happens here is US is using the 1,000 ICBMs, in Russia becomes involved, and we target these various areas. But for the people who are not hit by the nuclear missiles, they should wish they were hit by the nuclear missile because it becomes a nuclear winter. So they are not going to die slowly, they're going to die painfully. So the world is destroyed in 72 hours. And while you go through the book, she goes back and explains a certain of these doctrines and development and the football and all this kind of stuff. So it's really a depressing book. So if you want to be depressed, you should read that book. Especially because you have small states now, like North Korea, who have access to this. And in this book, it's North Korea who's triggering this chain reaction of escalation. Wow. So that's one depressing book. If you want to read something,
you have something optimistic,
less depressing. I think this Money, A Story of Humanity is really good by David McWilliams. Explains the history of money and why it's the greatest invention of mankind. It sounds strange. Somebody will say it's a wheel. Some will say it's writing. Actually, the first written language is a debt. Kind of, you notifying debt for a certain individual have put money into a granary, and then it goes for Lydia, gold coins, the florint, and then into more modern economics with John Law, and how kind of states are swapping their kind of depth into new money and going all the way into crypto. So if that's maybe a book for you.
Yeah, perfect.
Yeah.
Yes, that's a good combination then. A pessimistic one and then history.
Yeah, but actually what I read the most, every time I'm here, I'm talking always a non-fiction book, but I actually read the most fiction books.
Yeah.
And that's usually sci-fi, which is my
Why don't you recommend any sci-fi books then?
I was just now reading, and actually now I'm discontinuing. I'm reading the Expeditionary Force book, so I've now just stopped halfway into book 17. It's actually not book 17 because there's been some spin-off books, but the first book, 10 books of that series is brilliant. And then you're hoping that it's gonna stop.
Yeah.
And then there was the book, I believe it's 15 or 16, called Aftermath. And I thought, finally the last book, but no, he's making too much money writing those books, so it goes on a bit too long.
Yeah. No, but that's a perfect. So now we have several recommendations. I'm reading Shogun. It's a very big book. So that's also,
Shogun?
Yeah.
From also the TV series?
Yeah. But I had to read the book first. Exactly.
Okay.
Oh, Oystein, thank you so much for coming. It was a pleasure and good luck in 2025. And it was fantastic to host you again.
Thank you.